US producer prices are flat in another sign tariffs aren't very inflationary yet. Speculation swirls on Fed Chair Powell's future. Bank Indonesia cuts rates. And Australian jobs data today will be the focus for the RBA. That's coming up in our 5 Things in 5 Minutes on Thursday, July the 17th. And then in our deep dive interview, ANZ Economist Krystal Tan analyses the tariff letters sent so far to Asian economies.
Indonesia still has set a benchmark. So countries like Philippines, Thailand, Malaysia, they will all want to get similar, if not more favorable tariff rates.
But first, in 5 and 5 with ANZ, US producer price inflation was flat in June, in a further sign that tariff effects are not yet being passed on by manufacturers to customers. ANZ economist Bansi Madhavani says that within the PPI, goods prices rose 0.3% in June, the highest since February. However, services prices fell 0.1%.
What that indicates is that in June, there was no spillover from goods to services inflation. On the whole, the data showed that wholesale prices stagnated in June and suggests that pipeline pressures are muted. The Fed will be encouraged by this data, but broadly, the Fed remains focused on upcoming inflation prints to see what the tariff impact on inflation would be like.
As of 4 a.m. Sydney Melbourne time, the S&P 500 was up 0.2%. The 10-year US Treasury yield down 3 basis points to 4.46%. Gold up 0.8% at $3,364 an ounce, while West Texas Intermediate oil futures were up 0.2% at $66.68 US a barrel. The US dollar index down 0.3%, which meant the Aussie dollar up 0.2% at 65.22 US cents. The Kiwi down 0.1% at 59.42 US cents. Number 2, speculations growing that Donald Trump is getting ready to fire US Federal Reserve Chair Jerome Powell. Reports overnight suggested the president had discussed the move with congressional Republicans. He later said he would not make the move, but added he wouldn't rule anything out. Here's ANZ Head of FX Research, Marja bin Zaman, on if Powell were replaced, what would happen with a more dovish chair.
In that scenario, if in the US we start to see more aggressive easing come through, then there's always a risk for inflation to bounce back. And what happens when inflation goes up and interest rates are low? You get an environment of negative real yields. And what that really then means is that you see commodities like gold tend to outperform. And obviously, if that comes to fruition, you're going to see a much weaker dollar than we're already expecting. And last but not least, such an event, if that even does happen, it will raise questions for Fed independence and credibility. So I think it's only going to be an increase in volatility.
Number 3, Australian jobs data for June later today will be the first look at how the labour market's doing since the Reserve Bank of Australia's surprise decision to hold rates this month. ANZ economist Aaron Luck is expecting jobs growth of 35,000 and unemployment to stay at 4.1%.
Employment growth has been robust over the past 12 months, averaging around 30,000 jobs per month, and we think that the strength will likely continue into June as well. Our own ANZ Indeed job ad ticked up in the month, and the employment index from the NAB business survey in June also recovered a little bit, so are we expecting some solid results today.
Number 4, Aaron says the RBA will be watching for signs of ongoing strength in the labour market as it weighs up whether it can cut in August.
If the unemployment rate does stay at 4.1%, it would actually be lower than the RBA's forecast of 4.2% for the June quarter. It would mean that the labour market is performing better than the RBA had expected, and we know that the bank is a little concerned about the tight labour market and the potential flow-on effects it has to wages and inflation as well.
Number 5, Bank Indonesia cut its benchmark rate 25 basis points to 5.25% yesterday. ANZ economist Krystal Tan says the move was to support growth after weakness in economic indicators such as retail sales and loan growth.
Bank Indonesia made clear that they did cut their policy rate and they did also signal scope for more. So for us, we continue to see scope for at least 2 more 25 basis point cuts in the current cycle. Our forecast is for a terminal policy rate of 4.75%. The bottom line is that the economy could do with more support and the real policy rate is still elevated.
Krystal Tan there, who we stay with for our deep dive interview with my colleague Alex Tarrant on what we know so far about the US tariff letters already sent to several major Asian economies. Here's Krystal.
Indonesia, South Korea, Philippines, Thailand, Malaysia. These are some of the key Asian economies that have received the tariff letters. So within this group, Thailand received the highest tariff rate, that's 36%. But It's unchanged, though, from the rate that Thailand had received in April. Now, at the other spectrum, we have the Philippines. The latest tariff letter rate is 20%. That's actually an increase from the 17% rate that was announced in April. Malaysia also saw its rate rise by 1 percentage point to 25%. For South Korea, the rate was unchanged at 25%. And then we have Indonesia. So it initially received a tariff letter last week with 32% rate, unchanged from April, but it has since managed to negotiate this down to 19% after securing a deal with the US.
And yeah, just looking through that Indonesia one, they're touting that tariff rate as a win now. So what was needed on their side of the deal to secure that through the negotiations with the US?
Yes, so Indonesia moved fast, right? The negotiating team was in Washington basically the day after receiving the tariff letter. So the new deal that's been announced supposedly includes tariff-free entry for U.S. goods. Indonesia has also committed to large-scale purchases. We're talking, billions in U.S. energy, agriculture, and also aircraft, including Boeing jets. So we're still awaiting more details, but it's worth noting that Indonesia's proposal ahead of the tariff letters was actually for tariff-free entry for 70% of US goods, not everything. So it appears that they had to upgrade their offer to finally seal the deal.
Will this have been noticed by other economies in Asia, do you think? And do you see negotiations along similar lines by other economies to try and secure similar deals?
Yeah, absolutely. I mean, Indonesia still has set a benchmark. So countries like the Philippines, Thailand, Malaysia, they will all want to get similar, if not more favorable tariff rates to ensure that they're not disadvantaged in terms of U.S. market access, right? So the Philippines, it has the negotiators in Washington this week, and President Marcos is expected to visit soon. For Thailand, it's reportedly offering tariff-free access for 90% of U.S. imports. Malaysia is actively negotiating as well. And then South Korea is also making progress. There were some positive signals from both sides. So President Trump did comment that Korea seemed willing to open up its market. He contrasted it with what he described as, a stubborn Japan. And last week, Korea's trade minister was in Washington. So there has been progress, and there have also been some hints about possible concessions involving parts of the agriculture sector. And he did express cautious optimism for an in-principle agreement by the August 1st deadline.
Which Asian economies might be most at risk if they don't secure lower rates than they're currently facing by the 1st of August? And how likely is it that all of these economies can even negotiate deals by then?
Thailand's going to be the most exposed, right? Its dependence on US demand is high. Exports to the US are equivalent to about 10% of GDP, and its current 36% rate is definitely punishing, right? It's much higher than the 20% rate for Vietnam or the 19% for Indonesia that President Trump has touted. Now, the deadline is tight, right? 1st of August. It's highly unlikely that we'll get any sort of comprehensive trade deals finalized in time. A more realistic outcome is going to be similar to what we saw with Indonesia, right? So there will be framework agreements that include pledges for market access improvements, greater trade cooperation that would hopefully help pave the way for deeply threatened tariff rate to be reduced to something more palatable.
There will be a point, I guess, where rates are all settled and deals are done. So what do you think the new normal for exports, for instance, looks like for these economies? Is it going to be diversification away from the US, and is that going to be like a structural change?
Yes, there will be diversification away from the US. I mean, these economies do recognize the importance of finding new markets, right? So they're making efforts to sign more free trade agreements with other partners. They're also looking to strengthen regional cooperation. And I think ultimately they would need multi-pronged strategy, right? Aside from trade partner diversification, there's going to be a lot of focus on, competitive advantages. How can they, boost domestic demand? How they need to, invest more in infrastructure, talent, innovation. It's about building resilience so that you can actually reduce your vulnerability to external shocks.
Krystal Tan there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Thursday, July the 17th. Catch you tomorrow with what those Australian jobs figures could mean for the Reserve Bank of Australia. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.